Good evening to all our viewers and welcome to weekly market presentation of SC Securities. So as usual, I will start the presentation with having a look at Colombo Stock Exchange performance, and then I will move into economic highlights and important news also be presented from international markets front as well. So starting off with the market performance, another bearish week for Colombo Stock Exchange where we could see declines in terms of both the industrial averages. During Monday's trading session, SPI lost by 126 points to close at 8,602.16, whereas S&P SL 20 index also declined by 52 points to close at 2,590.61. During the day, turnover was just amounted to be 1.08 billion. The only positivity came from foreign purchases that has picked up to report a value of 70 million on contrary to 23 million worth of sales. So most of the investors had a gloomy outlook regarding the September quarter financial results. Despite that, most of the companies managed to increase their top lines and bottom lines. So despite all these positives and the appreciative earnings season, the overall market sentiment remained to be somewhat negative. So that's why both the indexes declined during the week because investors kind of entered into an wait and see approach ahead of the budget speech in the month of November that is expected to be taken place in 2 weeks. So with this, the market sentiment was somewhat dull. But during Tuesday trading session, we could have seen a slight upstick in terms of both the indexes. So during Tuesday's trading session, SPI gained by 3.69 points to close at 8,605.85, whereas the S&P SL 20 index also gained up around 20 points to close at 2,610.60. But this gain was not sustainable. So the during the remaining 3 days of the week, again the SPI and the S&P 20 index bounced back to negativity. So during Tuesday's trading session, turnover picked up to report a value of 1.26 billion, whereas foreign purchases reported a value of 68 million on contrary to 8 million worth of foreign sales. And during Wednesday's trading session, market again came down. SPI declined by 43.89 points to close at 8,561.96, and S&P SL 20 index also declined by 8.87 points to close at 2,601.73. During the day, turnover reported a value of 1.19 billion and foreign purchases were at 56 million on contrary to 22 million worth of foreign sales. Thursday, also the same pattern. SPI further lost to close at 8,508.98 and S&P 20 index also declined to close at 2,583.75. Turnover level remained to be the same at 1.19 billion, but foreign purchases picked up. Especially, we could have seen an increased foreign buying in CT Holding. So with that, foreign purchases picked up to report a value of 124 million, whereas only 19 million worth of foreign sales were reported. So on Friday's trading session, that means today's trading session, indexes behaved on a mixed note. So SPI declined by 17 points to close at 8,491.8 for the week, but S&P SL 20 index gained by 1.68% with some increased buying behavior in index heavyweights to close at 2,585.43. But the turnover level has declined to report the lowest in 3 months at a value of 818 million. And foreign purchases again picked up for the 5th consecutive session in the week to report a value of 14 million, over 11 million worth of foreign sales. So the only positive factor was the foreign purchases that persist, and the net foreign position, net foreign inflows has also crossed the 18 billion mark so far. So considering the performance throughout the week, SPI lost by 2.71%, and S&P 20 index also lost by 2.16%. But the foreign inflow was reported, and that was an amount of 249.1 million. So looking at the treasury yields for this week, treasury yields again acted on a mixed note. 3-month yield gained by 5 basis points and now is at a value of 33.10%. 6-month yield remained at the same level at 32.53%, and 12-month yield declined by 3 basis points to 29.57%. If we look at the exchange rates, Sri Lanka rupee somewhat depreciated against the US dollar, but it managed to slightly appreciate against the Great Britain pound, euro, and Japanese yen. So looking at the key economic highlights for this week, even during last week presentation as well, we have pointed out the revival in the tourism sector with the resumption of 4 major airlines to Sri Lanka. So this time also we would like to highlight regarding the tourism sector revival. Russia's largest charter airline, Azuria, has resumed its direct flights to Sri Lanka from Moscow from this week onwards. And at the first flight, it came with a tourist of around 330 Russian tourists. So this is after multiple efforts taken by the tourism industry to see the recovery in Sri Lankan tourism industry and welcoming Russia and European-based tourists to spend their winter season here. So if we look at the tourist arrival numbers during the month of October, it has picked up to 42,062 over 29,802 from the previous month of September, and that resulted a growth of 41% on month basis. If we compare the 42,000 amount with the previous year figure, that was just amounted to be 22,771. So that is a significant increase. So with that, the 10-year, the year so far tourist arrival has accumulated around 558,000. So this was majorly impacted or positively affected by the resumption of Aeroflot, another Russian-based airline service after the dispute that they had with our country back in June-July period. So with that, most of the Russian tourists are coming to Sri Lanka. And even the government focus is to attract more European travelers because it's comparatively cheaper for them to stay in a country like Sri Lanka other than staying at their own homes because of the high energy prices in the European region. So this has become one of the key considerations of Sri Lankan government. And apart from that, the promotion of Negombo area in Sri Lanka as a transit zone for FIFA World Cup 2022 that is to be kick-started in this month at Qatar was also considered to be one of the most important fact in reviving Sri Lanka's tourism sector by attracting more tourists for the upcoming winter season. And apart from that, it has also reported by the finance ministry regarding the outline of Sri Lanka's public debt. So as of the report, central governments and the state-owned enterprises arrears in foreign and domestic debt and supplies credit up to the month of June has amounted to be 1,068 million. And if you look at the composition of the outstanding debt, 35.5 billion US dollars owned by the central government, whereas 1.98 billion dollars owned by guaranteed SOEs, guaranteed debt of SOEs, and 3.2 billion worth of outstanding debt is owed to the central bank. So this is the current composition of Sri Lanka's public debt. So total debt in terms of both local currency and foreign currency, including arrears, accounted for 1.27% from GDP. So that's a higher rate, and that's what the IMF wants us to address. So, with regards to ensuring the debt sustainability in Sri Lanka and to go ahead with the debt restructuring program, Sri Lanka has this week started their second talks regarding debt restructuring with the major stakeholder parties, major creditors. So we are looking forward a favorable reply for them. That is what is most important in us for us to grant the IMF funding requirements. And now let me move into some commodity highlights and international financial market highlights. So the commodities climbed up, especially oil prices goes up with the weakened dollar, the impact from the weakened dollar, and the considering the supply risk despite the recession fears and China's COVID outbreaks. And gold prices also gained up because the value of the dollar somewhat decreased throughout the week. And copper and aluminium prices also resulted an increase with the uh, increasing demand from the China. And if we look at the global financial markets acted on a mixed note for this week, whereas we see some declining trend, or we saw the Wall Street US markets ended up with weekly losses, but most of the Asian markets and European markets ended up with gains. That was basically due to the Federal Reserve's recent rate hike. They have unanimously agreed to increase the key policy rates by 75 basis points, and that's the highest since early 2008. So this has negatively affected on most of the financial markets despite the weekly recovery. And Indian shares also resulted an increase when for a weekly gain on the back of metal shares, because the companies are anticipating an increase in demand because of the resumption of activities from China after their COVID restrictions. And Chinese market also performed well during the week as some rumors and news reports based on hope for twin relief in terms of US-China tension and China COVID rules. So that grabbed the attention of the investors, and Chinese market went up and outperformed during the week. Yeah, that's basically the things I got to share from my front. Here onward, Harin will continue the presentation.
Thank you, Sachini. So looking at gold during this week, we were able to see how the unemployment rate became quite negative, and this affected the US dollar and the dollar index, whereas the dollar index actually started to decline, and most of the counters that's against the US dollar basically appreciated, including most commodities at this moment. So during this week, basically gold price was basically trading somewhat below the level of 1650, below the daily resistance level. Now that it has become a daily support level once again, as the price started to trade above the level of 1650. So we have a key level at the level of 1687. Once once it gets tested, we might be able to see the price coming towards the daily support for a minor retest if the price continues to become bullish. And the next daily resistance is at 1700, and also the price seems to be trading about 20 EMA as of this moment, below the 50 EMA, not quite below the 50 EMA, quite near to the level of 50 EMA. So once it starts to trade about the 50 EMA, also we have the clear confirmation that it's gonna basically trade quite bullish, and especially when it is above the level of daily resistance 1700, we have green light that this descending formation that we have, the descending trend that we have, could actually become an ascending trend. So as the price moves above the level of 1700, and also the both moving averages 50 and 20 EMAs, will be able to expect the price to reach further higher. So here we have a triple, somewhat like a triple bottom over the level of here. And once we had around on 28th September a low of 1614, and also 21st October we had a low of 1617, and this 1617 is a crucial area for gold, as the price gets always rejected from this area, and so therefore this is a very strong support area for gold, this key level of 1617. Now that the price is actually above the level of 1650, we have a quite hope that the price could actually consolidate over the level of 1650 and 1700. So once, like I said, once it is above the level of 1700, we have a good confirmation that actually there could be a trend change. Looking at our all share index during this week, it's quite declined to the level of daily support 8450, 8500, and also the RSI closed at 34 for this week. This is the daily chart and the daily RSI. So from this daily support, what we can say here is, if the index gets reversed or rejected from this area of 8450, 8500, we have basically the 28th October high, which is 8845, that could be initially tested, and further the level of 9000 we have as a daily resistance. So level, if so breakout above the level of 9000 could actually indicate a trend change again. Here we do have some sort of a descending triangle formation where we have the bottom line over the level of the daily support. So above 9000, if it goes above 9000, that's a good sign, I would say. But as of this moment, since the index is trading below 50 and 20 EMA, and also at the daily support level, it is at the daily support level, as it is trading below both the EMAs, we have bearish momentum. So this could be a strong daily support, but since there was so many retests over the level of 8450, 500, but I don't think this could sustain, mostly because as the index is trading below both the moving averages. And looking at our topic of the week, we had a high on September 28th, which is 124.5, and the price started to decline towards the level of the daily support 79.5, 82.58, and 80 being another psychological area for ACL. As this is the daily chart, we can have a clear look at the prices seems to be trading below the moving averages 50 and 20 EMA. So as the price was basically trading above the 50 and 20, we had a bullish momentum. Now that we have a bearish momentum, and here also we had a descending triangle formation. The triangle has been broken out, but we still don't have clear confirmation whether this is a false breakout or actually, and we do need a retest as well in order to make this official daily resistance level of 79.5, 82.5. So next week we might be able to expect a retest, or even the price coming above the daily support level, or making this daily support initial daily resistance level again. So as of this moment, it seems to be quite bearish, as the price is trading below both 50 and 20 EMAs. The RSI comes to a level of 33.6 and still in the mid-range. So hopefully, let's see during the next week what could happen to this counter, as the price, whether the price could actually further decline since the EMAs are, since the price is trading below the EMAs, or whether this could be a false breakout. Thank you very much. This is from my end. I hope you all enjoyed this video. Please do subscribe and like this video. Have a great weekend. Thank you very much.